Okay, so today we are going to start with the discussion of our homework. Remember that day I asked you to do the homework for question 1. If you have done your homework, please take out your work and check whether your answer is correct or not. If you didn't do, or you want to tell me that you don't know how to do, now it's time for you to learn again how to prepare ledger account for depreciation and also how to calculate the depreciation charge. Okay, so we'll start now. Let's read the question together first. A business buys equipment for 50,000. Please highlight 50,000. Equipment is depreciated using the reducing balance method. Please highlight reducing balance method. At a rate of 50%. Highlight the 50%. And now you need to prepare two things. First thing is calculate the depreciation and net book value for year 1 to year 4. Okay? Second thing, you need to prepare a ledger account for depreciation on the equipment for the first 2 years. So highlight first 2 years. Okay? Please be very careful when you read the question. A, you have to do for 4 years. B, you only need to prepare for the first 2 years. So you must be very careful when you read the question. Now, let's do the question together. This is your homework. Question 1. A part. We need to calculate the depreciation charge for year 1 to year 4. Year 1 to year 4. So let's write down what is the cost first. Okay. The cost is 50,000. And then we need to calculate depreciation for year 1. Depreciation year 1. How we calculate? We use 50,000 times 50% because the depreciation charge is using reducing balance of 50%. Then you know it is 25,000. Okay, you may not need to write this lah. You just write this. Use the cost to deduct the first year depreciation. You will get the net book value at the end of year 1. So this is the net book value of the end of year at the end of year 1. We need to calculate 4 years. Let's do the second year. When we calculate second year, we use net book value of year 1 to calculate, which means we take 50% out of this 25,000. So the answer will be 12,500. Then we use year 1 net book value, deduct year 2 depreciation. You will have year 2 net book value. Okay, let's continue to do. Just continue to do for year 3. Use 12,500 times 50%. So year 3 depreciation is this much. And the net book value at the end of year 3 1 more year to go. Year 4, we use 6,500 and take 50% as depreciation charge. It will be 3,125. Then use the net book value of year 3, deduct depreciation of year 4. You are able to get the net book value as at year 4. At the end of year 4 will be 3,125. So this is how you calculate for question 1A. Got it? Now, let's do question 1B. That means we need to prepare a ledger account. We need to prepare a ledger account. So let's draw the provision for depreciation account. This is B question. Write down the title. Provision for depreciation of what? This question is equipment. So equipment. Okay, 5 rows for this account. Please reserve 5 rows for this T account. Okay, and the question basically they didn't provide you any dates, so we just use year 1, year 2. Okay, because this is just a practice question, not a proper exam question. So every time, whenever we record depreciation, we'll start from credit side and it will debit to our income statement. So year 1, the depreciation charge is how much? Look back to your workings. You have done your working in 1A. So depreciation for year 1 is 25,000, which means you need to record 25,000 here. And we are debiting to income statement. Okay, so year 1, the balance you need to carry down will be 25,000. Bring down the balance to year 2. Balance brought down 25,000. And then in year 2, you charge again the depreciation, which is 12,500. Can you see? Okay, so we record it down 12,500 here, and we debit it to income statement. Therefore, your year 2 balance carry down is 37,500. Okay, the question only asks you to prepare for the first 2 years. So, we're almost done. Last step is to bring down the balance to year 3. So the question asks you to prepare for first 2 years, year 1 and year 2, but always remember, in your ledger account, the last step, you have to bring down the balance to the new accounting period. Okay? So this is your answer for your homework question 1. Now, let's go back to our disposal account. That day we have done question 7. Today we are going to work on question 6. And then after I demonstrate how to do question 6, everyone need to do homework question 2. You guys need to prepare homework question 2 for me. Okay, let's do question 6 together first. Read the question. A vehicle that originally cost 20,000 is sold 2 years later on credit to Xia for 6,000. Highlight 20,000, which is the cost. Highlight 2 years later so that we know how long we hold this non-current asset. How long did we own this non-current asset? It's 2 years. Then I sold it off on credit to a person called Xia. When I sold it to Xia, That means this person will be my trade receivable. Please write it down. Trade receivable. So I sold it for 6,000. Then the vehicle was depreciated using reducing balance method. Reducing balance method. And with a percentage rate of 50%, highlight the 50%. So now what we need to do, we need to prepare the general journal entries to record the vehicle disposal. That means I need to record whatever entries needed in order to record the disposal of this vehicle. That means the transaction of selling this vehicle. Okay, I've done the transaction of selling of this vehicle. So now I have to make journal entry. I have to make journal entries. Okay, so first thing, let's open up your general journal. Draw your general journal in your book. Eight rows, reserve 8 rows for it. And please leave some space down here, okay? Because we are going to open, you just simply open few T account so that you can understand better. Okay, you can reserve some space either on your book. Is either on the upper part or the bottom part or side, okay? Any place, any space, okay, that you have, you just reserve some space so that you can open up a T account for your understanding. Okay, so now this is the second time we prepared journal entry for vehicle disposal. The first time we did in class for question 7. If you don't really remember, please go back and check your notes again. So this is the second time I repeat what are the steps for us to record a non-current asset disposal. Okay, non-current asset disposal. So please remember the step. First step, whenever we sold off our non-current asset, we need to close our vehicle at cost account. We need to close our vehicle at cost account. The cost is 20,000. 2 years before I bought it at 20,000. That means vehicle at cost, vehicle is our asset. So debit side means value. Okay, means there is a value here. That means asset will always have debit balance. Therefore, this 20,000 will appear here. Am I right? Okay. It will be brought down every year. As long as you own the non-current asset, this 20,000 will be brought down every year, because it's still considered your business asset until the day you sold it off. So now, I want to close this account because this year I have sold it off. In order to close this account, I have to make both account balance. So I have to credit 20,000 in my vehicle at cost. But where should I debit to? We will open an account called vehicle disposal. Okay? Therefore, we will credit vehicle at cost, debit vehicle disposal. Okay, This T account, I'm not going to write the details because we are not required to prepare T account for this question. This T account is just helping you to prepare your journal entry. Okay? Therefore, we know that first step, whenever we sold off a non-current asset, I need to credit my vehicle at cost and debit to my vehicle disposal. So first entry in my general journal will be vehicle disposal, debit 20,000, vehicle at cost, credit 20,000. Okay, clear? Next step. Second step is to close the provision for depreciation account. Okay, I didn't write the full title because it's just to facilitate your journal entries preparation. So I need to credit, okay, I need to close my provision for depreciation account. But first thing, I need to know how much is the total depreciation charge. How much is the total depreciation charge for these 2 years? Therefore, I need to do some workings. Okay, let's do some workings here. So the first year, the depreciation charge will be 20,000 times 50%. Okay, how much it is? 20,000 times 50%, which is 10,000. Okay? And the net book value for the first year, we use 20,000 minus the depreciation charge. So it's 10,000. Then we need to calculate the second year. So you can write down depreciation for first year and depreciation for second year. For second year, when we need to calculate depreciation, we need to use first year net book value, which is 10,000 times 50%. So it's 5,000. Since we only own this vehicle for 2 years, we only need to calculate 2 years of depreciation charge, which means first year depreciation charge 10,000 and second year depreciation charge 5,000. These two will be your total depreciation, okay, for 2 years. So imagine we sold the vehicle on the second year, 2 years later, right? Okay, 2 years later. So it's after 2 years. Okay, it could be the beginning of the third year. So whenever provision for depreciation, please remember you will have credit balance. Therefore, the balance brought down will definitely on credit side. So 2 years total depreciation is 15,000. Okay, before we sold the non-current asset, it's 15,000. Now, I sold it off. So I need to close this provision for depreciation account. Therefore, I debit my provision for depreciation. So I can close it. And then I credit to my vehicle disposal. So in your general journal, we debit provision for depreciation of vehicle. $15,000, and we credit vehicle disposal. $15,000. Okay. Now, look at your question again. We have done recording the cost. Okay, close the cost account, and we have closed the depreciation account. What else we need to do when we sold off an asset? The third step, we need to record how much we received. How much we received from the sales of the current asset. Okay, non-current asset, sorry. So here it did mention I sold it on credit to SIA for $6,000. Therefore, imagine there's one more account, T account here, small T account, SIA. If I sold this on credit to SIA, I need to debit SIA account. Okay, debit SIA account with $6,000 because SIA is my trade receivable, and credit to my vehicle disposal account. Therefore, in your journal entry will be debit SIA, credit vehicle disposal for $6,000. Okay. Lastly, okay, basically you don't need to look at this account anymore. Once we have done these 3 steps, so let me repeat again the step. First step, close the vehicle at cost account. Second step, close the provision for depreciation account. Third step, record any proceeds that you receive from the sales. That means any money that you receive from the sale. And lastly, we need to close this vehicle disposal account. How to close an account? Actually, we have learned. We need to make both sides balance in order to close an account. So let's look at the vehicle disposal account alone. In order to make both sides balance, what else I need to add in and on which side? Okay, so we know credit side we have 21,000, debit side I have 20,000 only. Therefore, I need to add 1,000 here. Am I right? Then only I can balance out. I can make both sides balance. Then what is this 1,000? Where we going to credit it? We already debit vehicle disposal account. Where are we going to credit it? Okay, it's income statement. So we need to debit our vehicle disposal account for 1,000, and we credit to our income statement 1,000. This 1,000 appear on your vehicle disposal account debit side. What does it mean? It means this is a profit. This is a profit. Okay? If you don't understand why, go back to the notes that I gave you that day. The disposal account, debit side will have what, credit side will have what transaction. Remember? Go back to the notes, then you will know if you have a difference on debit side, it shows a profit. If you have a difference on credit side, it shows a loss on disposal. Okay? So we have done with question 6.